obviously a spot Bitcoin ETF is a major catalyst for that, but we're just in year one, and it's not the only thing that we're looking at when we say that.
It's time to talk spot Bitcoin ETFs, and joining me I have Ryan Rasmussen, a researcher at Bitwise. For those unfamiliar, Bitwise is currently one of the organizations waiting for approval for their listing of a spot Bitcoin ETF in the United States. We'll be discussing everything to do with the process and also how a spot Bitcoin ETF could impact the markets. Not only that, Bitwise released a quarterly crypto market report, so we'll be covering other topics, not just Bitcoin, and answering some of the questions that you've all submitted. This is a discussion that you don't want to miss. So Ryan, thank you so much for joining today. How are you doing?
Yeah, I'm doing great, Jessica. Thanks for having me.
No worries at all. Great to have you on board. I think what would be great is just to start with some context for our viewers. Obviously, you are a researcher at Bitwise, so we really appreciate you taking time out of your busy schedule to come and join us today. Just some context on Bitwise as a firm and also their relationship with crypto assets.
Yeah, so Bitwise Asset Management is a company that's been around since 2017. We primarily serve financial advisors, hedge funds, RIAs, basically the professional investment community. We have a suite of crypto products. So we run index funds or ETFs or private placement funds or alpha funds around crypto assets. So all we do is crypto. It's what we do 24/7, 365. And we serve financial advisors, investment advisors, and professional investors. So basically trying to help bridge the gap between crypto and traditional finance in a way that fits into the workflow and the reporting and the pipeline of the traditional investment professionals and kind of make that seamless access to crypto available.
So you live and breathe crypto 24/7. So the perfect person for this kind of conversation on spot Bitcoin ETFs.
Yes, we do. We do. We're right in the intersection of the ETF space. Our CIO, Matt Hogan, launched and sold ETFs.com back in the mid 2000s and was kind of at the forefront of ETFs when those were originally kind of becoming a thing in the mid 2000s. And so we're right there in it. A lot of our team has worked at BlackRock or other traditional financial institutions. And so we definitely have lived and breathed that side of things. And for the past 6 years have been focused on crypto. And so it's a really interesting time, obviously, right now with everything going on and kind of where those two worlds are colliding. So it's been really exciting year and really excited to talk about it.
And I think the $1 million question now is, why is a spot Bitcoin ETF? Why is it such a big deal for those that are in the crypto space already?
Yeah, it is a really good question. I think the spot Bitcoin ETF is misunderstood in a lot of ways. So spot Bitcoin ETF really just creates a wrapper around crypto or around Bitcoin for traditional investors, traditional advisors to access crypto assets. So traditional investment professionals who are investing maybe on a platform like Charles Schwab or Raymond James or one of the many platforms that financial professionals use may not be able to access crypto directly. That could be because of compliance reasons. Maybe the firm that they're with doesn't allow them to invest in crypto because there isn't an ETF-like vehicle. Maybe it's because they just don't have an easy way to do that. There's a lot of complexity involved when you're allocating to assets on behalf of clients, going and setting up an individual retail account on Coinbase. And then beyond just purchasing and custodying the assets, there's a whole element of how does this work into the workflow of a broader portfolio management and bringing in those investments for family planning and for university planning and for all those elements that go into creating a financial plan. And so an ETF creates a vehicle that makes it easy with one click for financial professionals to invest in crypto. That's really why it's so important. It allows traditional investors, without having to spend a lot of time going into and the burdens of handling crypto assets, custodying crypto assets, and trying to fit that into the normal pipeline. It allows them to do that with one click.
And I've listened to some of the other interviews that you've done in the kind of the build up. This year seems to be the year that the narrative is really strong. We've seen since October, the markets really have been moving purely on the speculation of a spot Bitcoin ETF being launched fairly soon. And you've previously said that a spot Bitcoin ETF could bring as much as $50 billion to $100 billion in inflows over the next 5 years. So this is obviously a kind of a big fish when it comes to industry narratives. What is your take on this figure? How was it something that came to light? And also, why do they matter?
Yeah, it's a huge fish for the industry. So if you go back to when the first spot Bitcoin ETF application was filed by the Winklevoss twins, that was back in 2013. The market really wasn't ready for a spot Bitcoin ETF at that point. We still hadn't had Mt. Gox and some of these other major blowups happen that have kind of taken compliance and taken the regulatory environment to where it is today. So it's been going for almost 10 years, this effort to launch a spot Bitcoin ETF. It's a huge deal because it could bring in a huge amount of capital into the crypto space that obviously can be beneficial to prices as you have new money coming in, pushing up the price of Bitcoin. But the reason why we think there's going to be such a large amount of inflows into a spot Bitcoin ETF is because right now about 80% of traditional money in America, for example, hasn't been able to access crypto for those reasons that we talked about. So you have 40% of money in America that's guided by traditional financial professionals, financial advisors. You have another 20% that's guided by the 401ks and other elements of investing that also need a vehicle that's friendly to that to invest in. And then you have maybe 20% that's retail driven. So the 20% that's retail driven obviously has been able to access crypto through Coinbase, through MetaMask, through other elements. But this large 80% bucket of investors just haven't been able to access it. So when you have new money being unlocked that's been sitting on the sideline and really that's been eager to get into crypto, that can create a huge influx of capital that can create positive price movement. I think that's why we've seen so much positive price action this year in anticipation of this. You have investors trying to front run that idea that a lot of new capital is going to come into the space in a very short time.
And it's interesting that you say 401k as well. I asked some of our audience if they had any questions for you to really make the most of the opportunity, and they have a few regarding that. So we'll get to that a little bit later on in the discussion. One question I do have at the moment, so obviously this week, a really strong narrative that we have seen is kind of the regulatory outcomes that are coming out of the US at the moment, particularly with the Department of Justice and certain cryptocurrency exchanges. As a kind of cryptocurrency market focused entity, as Bitwise, when you see this kind of news, is this the kind of thing that could potentially get in the way of a spot Bitcoin ETF getting approval in the next, let's say, 6 months?
Yeah, there's certainly been a lot going on in the regulatory environment really this whole year. If you look back to the beginning of the year, that's when we had the SEC file charges against firms like Binance and Coinbase and Kraken for their staking program. And then just this week, we've seen the SEC file charges again against Kraken for what they say is operating an unregistered securities exchange. Obviously, the DOJ and Binance just had this major development in the case against Binance. And so there's this constant evolution of the regulatory environment. Part of that's because we're in a brand new asset class. Crypto hasn't been around that long. For a long time, it's lived in this unregulated world. And so as it matures into an industry that lives within the bounds of regulations, you're going to have some of this clashing with regulators. Now, the SEC has been more standoffish towards crypto than maybe it has towards other industries. I think everyone knows that. But I don't know how much those cases really impact the outlook for a spot Bitcoin ETF. In some instances, it's actually pretty bullish for Bitcoin because we haven't seen the SEC name Bitcoin or even Ethereum in any of these lawsuits as securities. So if Bitcoin is believed to be a commodity, if Ethereum is believed to be a commodity, and it's kind of backed by what the SEC is including in these charges, then it's unlikely this would create any speed bump or hiccup to a spot Bitcoin ETF. We already have futures ETFs wrapped around those assets, which are trading on the CME and regulated markets and the New York Stock Exchange. And so we don't think it's a huge jump to have those wrapped in an ETF format that are just spot Bitcoin, spot Ethereum ETFs. But the regulatory environment is certainly constantly evolving. We have boots on the ground in DC talking with regulators, following all of this. And it's certainly, you can wake up any day and see any major news item drop when it comes to regulation. But I think it's important that some of the bad actors are getting weeded out of the space, especially over this past year and a half. We've obviously seen that happen. And so I think it's good that some of the bad actors are getting weeded out of the space. That leaves room for those positive actors like a Kraken, like a Coinbase to really flourish in a more regulated and transparent environment.
And I don't envy you guys. I think it must be a real challenge at times to have to work closely with the regulators. Kathy Wood was on CNBC, I think it was last week, and she was referencing the fact that she was actually really bullish on a spot Bitcoin ETF approval in the near future because she said the open conversation that she's having with the SEC now does feel different to how it was a few months ago. So for Bitwise, how are you finding this process at the moment? And how is this kind of communication? How's it been?
Yeah, it's really interesting. I think we spend a lot of time, like I said, talking with regulators and kind of keeping those channels of communication open. It's definitely one of the things that you have to put resources into as you're growing regulated and compliant asset management company in the US. I can't talk about specific ETF filings, but as a broad kind of category of what we're seeing a lot of positive momentum. I think BlackRock coming into the space really is the biggest sign that things may be shifting. It's the largest asset manager in the world. They're here to say that they think crypto, and not just crypto, with you can see with Bitcoin, obviously they were excited about Bitcoin, but with the Ethereum ETFs, it's not just Bitcoin, it's all of crypto that they're leading into. And I think that's a sign that they believe the asset class is mature enough to be brought to mainstream investors. And, BlackRock's obviously talking with the SEC. They've launched hundreds of ETFs since they've been around, and only one of those has ever been rejected. So they have a pretty good pulse on where we are on the regulatory plane. And I think that's a sign that things are definitely changing. It's not like it was 2 years ago, 3 years ago, 4 years ago. This isn't the first spot Bitcoin ETF application that we've submitted, that we've applied for at Bitwise, certainly. And we're definitely the most hopeful now, I think, than we've ever been, that we will see one in the next few months and perhaps the beginning of next year.
We interrupt this programme for an emergency crypto weather forecast. Get ready for a whirlwind of savings. We're seeing some high-pressure sign-up bonus systems forming in the northeast, with some exchanges offering up to $40,000. In the south, we'll be seeing some heavy discounts on hardware wallets, so watch out for those if you're going to be out and about. And then in central areas, there's a high chance of trading fee discounts, which should be settling in later on, so be on the lookout for up to 60% off there. Lush! For a more comprehensive forecast, just visit coinbuilder.com/deals or use the link down in the description. These deals are red hot, so make sure to take all the necessary precautions. Well, that's all for today's forecast. Now back to the scheduled programme.
And I had a recent look through the Bitwise crypto market report, and I found it extremely useful. So to everyone watching, the link is in the description. I definitely advise everyone to go and take a look. One of the really interesting reference points that you had was you'd broken down Bitcoin's performance, and you'd broken it down into 4-year cycles. So starting 2011 to 2014 was the Bitcoin cycle. Then we moved over into the Ethereum cycle, then the early application cycle, and then as of 2023, the mainstream cycle. So this sounds like it'll be probably a pretty significant catalyst within the mainstream cycle. For people like me and you that are retail investors, how is the next few years going to look? Based on the fact that we are seeing a spot Bitcoin ETF, we are seeing more mainstream investors getting into the space. What is the overall industry going to look like?
Yeah, I think it's going to look so different. I'm really excited for how it's going to look. It's been very fun being in crypto as it's matured and as it's evolved. But I think the next few years are going to be some of the most exciting times that we've had in this industry. So that chart that you're referencing, it shows that Bitcoin since 2011 has operated in these 4-year cycles. We started in 2011 because that was really the first time that Bitcoin was available to be bought and sold on exchanges. And if you look, the way that cycle plays out is there's generally 3 very strong positive years of returns, followed by a year of resetting or a year of pullbacks. That happened in 2011 with the launch of Bitcoin coming into the mainstream of crypto and really leading the pack there. Then we had the launch of Ethereum in 2015, 2016, 2017 was obviously the major pullback year there when ICOs got a little bit over their skis, but we saw the launch of Ethereum become a new catalyst for a new cycle of crypto. Then we had the next cycle driven by DeFi, NFTs, and stablecoins. I think we all remember the hype of DeFi summer that was followed by the NFT mania and stablecoins, which ended in a catastrophe with the implosion of Luna's UST algorithmic stablecoin, followed by the implosion of CeFi lenders, and then ultimately with FTX. So you have these 3 years of positive gains, followed by a year of pullbacks. That cycle has repeated itself now 3 full times, and we think 2023 is the first year of a next cycle repeating. We think that's going to be the mainstream era of crypto. Obviously, a spot Bitcoin ETF is a major catalyst for that, but we're just in year 1, and it's not the only thing that we're looking at when we say that. So we do think it's going to be a major catalyst. We think you're going to see, and we're already seeing it play out actually with the CEO of BlackRock, with Fidelity, with these other major firms going on CNBC and talking about Bitcoin and crypto as a flight to quality asset class that investors should have in their portfolio. And they're seeing demand from their clients around the world for crypto products. And so you can see it coming to the mainstream for investors, but also from a consumer application standpoint. We're finally hitting this inflection point where scaling and where usability of blockchains is really becoming realistic. And so you have layer 2 solutions. You have Solana becoming very popular these days, which are low fee, high throughput blockchains and scaling solutions that allow these new consumer applications that really we probably haven't even imagined yet to come to light. I mean, we saw Friendtech, for example, earlier this year become really popular on Coinbase's scaling solution. We've seen other use cases like Farcaster, like decentralized social media becoming very popular. And so I think that the whole mainstream era that we're talking about is going to bring in mainstream investors, but also going to bring in mainstream applications that most of us won't even realize we're interacting with the blockchain on the back end while we're using them.
And you mentioned socialify there as one of the kind of the buzzwords of potentially maybe a new narrative. There was one really interesting metric, which was the crypto venture funding as a quarterly chart and analysis on Bitwise. And it was fairly evenly distributed this quarter rather, between infrastructure, NFTs, gaming, Web3, and DeFi and financial services. The last few quarters, it seems like it was more leaning towards NFTs being the fairly dominant trending player within crypto venture funding. So I want to ask, based on the kind of the foot to the ground that you have, is there any new categories that you think are going to be coming in the next few quarters that could potentially be added to this and be the next trend? You've mentioned the DeFi summer of 2020 and these kind of trending themes and narratives that we do see in crypto. What do you think would be next?
It's really interesting to zoom out and kind of look at how these trends have evolved, and then you can overlay those with what we all remember those experiences being like with DeFi summer or like with the NFT boom. So I think that I think what we're going to see is really an influx of capital into consumer applications. So you mentioned SocialFi. I think that's going to be one category that we're really going to see boom. I think we're going to see less investment in the infrastructure layer and less investment in DeFi, for example, and just more investment in consumer-facing applications. I think gaming is going to be one area that sees a ton of new capital flowing into it over the next few years. Like I was saying, we finally have the underlying technology of scaling solutions, of Solana, of these blockchains that can really handle high throughput transactions and a lot of transactions per second at a very low cost. So I think gaming is going to be a really important sector that's going to get a lot of attention. I just think any consumer application, whether that's centralized social media, whether that's something like a Hive mapper, right, which is like decentralized mapping, or just really any consumer applications. I really think we're also going to see, Fortune 500 companies coming into the crypto space in a big way, in a way that we haven't seen in the past. We've seen Nike, we've seen Starbucks kind of dip their toes in crypto and in different kind of blockchain use cases. But I think we're going to see this huge influx of Fortune 500 brands embracing crypto as they see it can extend their business and create new lines of revenue for them.
And that's really interesting because you would assume that actually the companies beforehand, for example, when there was the metaverse hype, a lot of companies wanted to get in and get a piece of the pie. And that might have been more because they were looking to have a narrative that they were cool and embracing emerging technology. But it sounds like what you're saying is more companies are going to adopt the technology, not because it's a kind of cool narrative that they're at the forefront, but actually because they are starting to understand the benefits of blockchain behind the scenes.
Yeah, that's exactly right. I mean, we're seeing with recently there was this pilot project that's been going on with the Monetary Authority of Singapore, and we've seen big banks like UBS and like JP Morgan work through different types of transactions using blockchains, using DeFi protocols. So they're tokenizing bonds and they're making trades and they're automating portfolio management using DeFi and using blockchains. And that's not because it makes their business sexier or it allows them to kind of hit some mainstream headlines. Most of their clients don't care at all about crypto or blockchain today. But we do know that they care about these companies, JP Morgan and UBS, they care about increasing their bottom line. They care about streamlining processes. And so the ability to have crypto and blockchain technology improve their business is a huge benefit. And any kind of headlines they get after that is just icing on the cake.
And then the big question is kind of what blockchain would it be? There was one really interesting metric on the Bitwise report, which was blockchain revenue. So just for the viewers, and I'll share a chart on the screen, but in 2019, emerging from the kind of 2018 bear market, Ethereum did $35 million in revenue. This year alone, and we're not even at the end of the year yet, Ethereum has done $1.75 billion in revenue. And it does sound like a positive scale, but then when you compare it to Solana, for example, at $11.03 million this year so far, does it tell us the next few market cycles that blockchains that are going to be at the forefront are cheaper, are more scalable? Do you think Solana really can give Ethereum a run for its money as we look ahead into this kind of mainstream adoption market cycle?
It's such an interesting dynamic that we're seeing emerge with Solana. I think, there were so many people last year that were saying Solana is dead when we had the fall of FTX and we had the implosion of prices. So the fact that we're even seeing it have a major resurgence this year, I think is really, really interesting. and really promising for where that tech is moving. Revenue is one of the major indicators of real traction. And obviously, Ethereum has been one of the leading blockchains in terms of revenue and in terms of usability and developer activity and users since it came out in 2015 and really over this past cycle. But I think it's really promising that we're seeing the emergence of new blockchains. Solana certainly is promising. They're taking another stab at how to have a high throughput blockchain. I think I was just talking about the program that JP Morgan is working through with the Monetary Authority of Singapore. They did that on Avalanche. So I think you are going to see this emergence of other L1s. I don't think there will be 100 layer ones that are successful, but I think there'll be a few that are successful. I kind of think about it in the same way that you have Google's Android or Apple's iOS. There's not just one that dominates the entire industry. You kind of have two. You have two options for developers. You have two options for users. You have two options for companies to deploy to. Some will deploy on both, and I think we're seeing that with certain applications that they'll deploy an application on Ethereum, on another layer two, on Solana, and expand their ecosystem. And then you'll have some that are specific to one blockchain, and it's really just a choice at the end of the day by the user and by the developers and by the companies. And I certainly think Solana could give Ethereum a run for its money. I don't think that it will eventually overtake Ethereum. Ethereum just has such strong network effects. It, as you can see here, with just revenue alone. But if you look at the other metrics, like I was talking about, like developer activity or transaction count or users or just the number of applications, it has such strong network effects that I think it'd be really tough to be overtaken. But I certainly see Solana and maybe some of these other blockchains like Avalanche emerging as contenders for that second spot.
Very interesting indeed. Okay, fantastic. Now, this is the round of audience questions that we have had come through. So the first one, going back to 401ks that we had discussed earlier, it's from JTCLE. So thank you to everyone that submit questions. Would a spot Bitcoin ETF be likely offered in 401k plans?
Yes, I love it. I love these questions. I believe a spot Bitcoin ETF will certainly be available in 401k plans. Most 401k platforms allow you to invest in some self-directed way in ETFs or in portfolios that own ETFs. So I will not be surprised if as soon as an ETF is available, we start seeing that trickle into 401k accounts. That's why an ETF is so powerful, is it allows investors who don't have the ability to do that through whatever platform they're using in the way that the crypto ecosystem is set up today. It allows them to allocate to cryptos. So I think a spot Bitcoin ETF will be available to investors in a retirement account, in a Roth IRA, and traditional 401ks. And that's really exciting. That's part of that new capital that's been sidelined and eager to invest in the space that hasn't been able to access it.
Awesome. And we have Shield Madden AU. He said, I'd be interested to know what Bitwise thinks about how volatility might be tampered with institutions involved and not wanting to spook their less savvy crypto newbie investors. Will we see noticeably smaller drops from the bull run all-time highs?
Yeah, volatility is a really interesting element of asset classes. As asset classes mature and get older, we tend to see volatility drop. That's because you have more liquidity coming into the space. You have more players in the space. And I certainly think institutions play a large role in that. So as more institutions come into the space, as we have a spot Bitcoin ETF, that just creates more capital, more liquidity in the ecosystem. That means we'll have less sharp price movements on major news or on big trades. And you have arbitrageurs coming in and traders coming in who help mitigate that volatility. So generally, we do see volatility slow down on asset classes as they get older. We've seen that happen with Bitcoin since it launched in 2009, and since it's been trading on major exchanges, and since we're seeing more institutions get into the space. And I think we'll continue to see that. So that's really great, obviously, because volatility is one thing that scares traditional investors, and it makes sense. You try to minimize volatility when you're managing a portfolio because volatility often means risk. And so less volatile asset class makes it more attractive to traditional investors.
Awesome. And final question we have from Zara 101, which is when it comes to price predictions for the next 1 year, if everything does go to plan or as to be expected with a spot Bitcoin ETF approval, let's say around January time, is there a expectation of prices during the next market cycle?
Yeah, certainly. I think we've seen price targets out there from a lot of different asset management firms. Kathy Wood of ARK, I think, has a price target of around $1 million in the next 10 years or next 7 years now for Bitcoin. I think we're a little bit more conservative with the price targets that we put out there, but certainly with that 50 billion of inflows or up to 100 billion of inflows coming into Bitcoin over the next 5 years, that could have a positive impact on price. So I wouldn't be surprised if we see prices move north from here. We're already seeing all this buildup in front of trying to front run or ahead of a spot Bitcoin ETF. And so will be no surprise to see more positive price action afterwards. I think, on the fake news that happened a few weeks ago from Cointelegraph on there being the approval of spot Bitcoin ETF, we saw the price of Bitcoin rally more than 10%. And we're seeing that with these other spot Bitcoin applications for Ethereum, for example. And so I think that's just like the headline. And that's not even after the impact of the capital coming into the space. So once you have to actually have the new capital coming in and buying these assets off the market, that's when you really start to see that price appreciation and price discovery happen. So I think there's certainly room to run. I think that's one of the reasons we're so excited on this next cycle. I guess one thing to touch on that cycle chart once we do, or I encourage people to look at it. And one thing about that is normally year 3 is the craziest year in that cycle, and 2023 is just the first year. So while it feels to many like maybe they've missed out, or maybe it's too late to get into the asset class, I think we're just in the beginning of this next cycle, and there's a lot of room for positive price action based on the setup that we're seeing.
And I'm curious now, when it comes to the consensus within the United States, you're based out of LA, we're here in Dubai. So we see a lot of kind of crypto-centric media here. Dubai is very inclusive of cryptocurrency narratives and news. It's always quite a good market indication if mainstream media are covering crypto news, not necessarily FUD, but market prices as well. With us being fairly close to possibly launching a spot Bitcoin ETF, we are seeing recently, as you mentioned, Cathie Wood and the CEO of BlackRock talking on mainstream media. Are you starting to see mainstream media pick up the crypto narrative more?
Absolutely. It's one thing when you have major asset classes across the board moving up, but I think the thing that's unique this year is that that crypto as an asset class is the best performing asset class in the world. You have stocks, you have bonds, you have real estate and commodities, and some of these have done decently well this year. I think the S&P and the Nasdaq are up, a little bit over 10% year to date, but that's nothing compared to what we're seeing in crypto markets. It's impossible for mainstream media to ignore things like crypto equities, like the blockchain mining companies, or like a Coinbase, or the Bitcoin in and of itself, or Solana, which is up over 500% year to date. It's impossible for the mainstream media to continue to ignore those when they're outperforming every other major asset class. So it's certainly been picked up, and you can't really understate how big of an impact these financial institutions have on how the media and how the traditional investor and everyday individual views crypto. They bring so much legitimization to the space that it's impossible to ignore. And so you're going to have naysayers about new technologies and new industries, but I think in general we're seeing a 0 to 1 shift in the media and the way that they're viewing crypto, and it's certainly happening in the mainstream media. It's also certainly happening with regulators and policymakers in the U.S. You're seeing a lot of positive developments across Congress and across senators who are starting to really get educated on the benefits that crypto can have on society and on businesses, and the benefits technology brings. And so as that shifts as well, you'll have less of these political hit pieces that are put out there that damage the industry's reputation as well. And so I think all tides are kind of turning in the right direction there.
Well, Ryan, thank you so much for your time. And we would love to touch base once we do see the spot Bitcoin ETF approval, and just to see how it went, to see some of the feedback that you have here at Bitwise. But thank you so much for the time. Really appreciated it.
Yeah, I would love to join again, Jessica. Appreciate you for having me. Appreciate everyone for listening, and looking forward to these next few months. I think it'll be really exciting.
Well, I hope you enjoyed hearing from Ryan. I'm going to leave the link to his socials in the description below. Feel free to check them out. And if you are into crypto, make sure to check out the Coin Bureau deals page. I'll leave a link in the description. It's got trading fee discounts, sign-up bonuses, and discounts on hardware wallets, plus some snazzy Coin Bureau merch. Links will be in the description. Thank you so much for watching. See you all next time.